These two banks just collapsed over the last week. It's going to have a huge impact on you, the rest of the broader economy, and the Kansas City real estate market. So we're going to break down exactly what that means, what's happening in the Kansas City real estate market here, and we'll end this video with two golden opportunities if you are the market to buy a home, how you can do it safely, get a good deal in the process. Let's get started. So first things first, we've got to take a couple steps back and explain how we got to where we're at right now. The Federal Reserve has been increasing interest rates every single month for the last basically year, since last March. The reason is because inflation's been sky high. I mean, you've seen it hit your wallet every time you go to the grocery store. The bill's getting more and more expensive. And at the end of 2022, we saw mortgage rates shoot up over 7%, right? We went from sub 3% mortgage rates, some of the lowest in history, to some of the highest in the last 2 decades, in a matter of months, at the snap of fingers. The problem is that inflation's still an issue. It recently picked back up. And as a result, the Federal Reserve has calculated that we need to continue increasing interest rates through the rest of the year. So the value of our currency, the value of the money that's sitting in your bank account, does not just wither away entirely. And that was the plan, is to keep increasing interest rates, which would put even more upward pressure on the mortgage rates and make it harder to buy a home. So what does this have to do with the banks collapsing? Why does this matter for the Kansas City real estate market? Well, as the Federal Reserve has followed that plan of increasing interest rates, it's become really difficult and expensive to borrow money, which is why a mortgage is far more expensive today than it was just a year ago. It's also why businesses are having to fire and lay off a bunch of employees left and right, why they're having to go to the bank to pull cash out just so they can keep their business operating. The problem is when all of those companies go to the same bank at the same time and request large amounts of money that the bank just does not have on hand. That's when the banks collapse. That's why we've seen 3 huge banks across the country collapse in the last week, why the federal government has stepped in and basically bailed them out. The federal government has basically written a blank check to all of these banks so that there's not a huge panic across the country and that the banking system doesn't collapse, because it's all based on our confidence that our money is safe in the bank. And if that collapses, then you and I and everybody else who's watching this video, not watching this video, is going to be lined up at the bank trying to get their money out. So that's why the federal government stepped in. And that's where we're currently at. Before this happened, the problem was getting inflation under control. That was the Federal Reserve's primary objective. But now we're in the middle of a huge banking crisis, the biggest since 2008. So now we're walking a tightrope between increasing interest rates so inflation goes down and maintaining confidence in our entire banking system so that it doesn't collapse, which would cause even more catastrophic results down the line. Now, all of this comes down to what the Federal Reserve decides to do next Wednesday, which is when they decide if they're going to hit the pause button and let the banking system get back to normal and reinstill confidence in it while letting inflation continue. Keep in mind, the government just basically created billions of dollars out of thin air and written a blank check to any bank so that our banking system does not collapse, which will certainly make inflation worse. So do they let that happen but hit the pause button for the sake of the banking system, or do they continue with raising interest rates as they planned on before this crisis and just let whatever is going to happen to the banking system? I'll be right here to report next week exactly what this means, what the Federal Reserve decided, and how it'll impact you and I. Subscribe so you're the first to see this video. But in the aftermath of all of this, mortgage rates have dropped. That's because mortgage-backed securities are a safer investment, and we've gone from over 7% mortgage rates as a result of this, just temporarily, to low 6% mortgage rates, which is a huge deal. The cost to buy a $400,000 to $500,000 home, the cost every single month has dropped about $150 as a result of this whole crisis. And while all of that is happening in the background of the broader economy, what's happening in the Kansas City real estate market is quite deceptive. So we've got all of the data that came out from transactions in February. We're going to take a look at it so you know exactly what we're staring down the barrel of as this economic situation continues. Here are the year-over-year statistics from February 2023 compared to February 2022. Days on market is the most noticeable one, going up to 46 days on market to sell a home. Almost a 50% increase over last year. If you move down a notch, you can see the average sales price went up 2%, but this is kind of a wash, doesn't show a real trend because interest rates were pretty low when a lot of these homes that were sold in February actually went under contract, right? This is when interest rates were, mortgage rates at least, were in the 6% instead of where they were at just a week ago, which was above 7%. Now, this was all before that banking crisis, so things have changed. There's a lot of volatility going on right now, and we'll talk about what that means just in a second. You'll also see that inventory has gone up quite a bit. Pending closed sales have also gone down. Now here's a graph that'll show the month-to-month changes since August. You can see that days on market, it sticks out like a sore thumb. It has been increasing steadily since August. It's one of the only things that's not like pinballing back and forth, that has steadily been showing a trend upwards. Now you can also see that inventory has been decreasing since August too, because many homeowners just do not want to sail upriver where interest rates are nearly double, maybe triple what they currently are paying on their home. Why give up 3% if you are staring down the barrel of 7% mortgage rates? Many of these people are choosing to either wait it out for mortgage rates to decrease, or they're choosing to remodel their home, which has just gone through the roof because they want to make some changes to the home. They've got some cash on hand and they're sick and tired of waiting, so they're trying to make it happen. Now the reason all of this is deceptive is because while you see days on market going up on average for most homes that are listed on the market, there are select markets that are super hot right now, which have homes selling in a matter of days, and not just selling really quickly, but homes that are selling way over the asking price. So I'm going to show you data points from 3 different markets, all of which are very popular. We're going to go down one by one. So the first one is Brookside. You can see this house listed at $425 and it sold at $440 in just 3 days. $15,000 over asking is not that big of a deal when we're talking about a $600,000, $700,000, $800,000 home. But when we're talking about a home that is $400,000, that's a big jump. It's a lot of money to pay over the asking price. Now here's another home from Roland Park that was listed at $375 and it sold at $400,000 in just 1 day, a $25,000 over asking price sale. You've also got Overland Park, this house that was listed at $550,000 that sold $20,000 over asking price at $570,000 in just 1 day. And it's not like I'm cherry picking these. There are plenty of other homes that are selling as quickly, possibly even more over asking price than the 3 that I just showed you. So what we're seeing right now is the homes, the listings that are really hot, the best of the best, they're going really quick and they're going at or above asking price. The homes that are lingering on the market and making up a bulk of that 45 days on market number are the homes that need some work, because investors have recently fled the housing market. People do not have enough cash on hand, especially in this category where we're looking at houses that are under $500,000. They just don't have enough cash on hand to make that down payment, pay the closing costs on the mortgage, and fix up the property afterwards. Now, I'm going to give you 2 golden opportunities that's happening as a result of some of these listings selling really, really quickly. But first, I want to explain kind of why that's how. Why are these homes selling in just a few days compared to the most homes which are on the market for 45 days? And it comes down to a couple reasons. Number one, listing agents are pricing based off of today's prices, not last summer's prices. Prices have come down just very, very slightly. The homes you see lingering on the market have been overpriced. The homes that you see going really quickly over asking price have been clearly underpriced, whether accidentally or deliberately, because that agent wants to bring more eyeballs, have more people see that home, fall in love with it, and then more people bidding up the price, which is what we saw in these examples. Part of what is amplifying that is that people are tired of waiting. Lots of people are getting gifts and money from parents, and they're able to get homes in this price range, usually as first-time home buyers. Now, golden opportunity 1. I know it's a lot to come out of pocket for the down payment on your new home, and then on top of that to pay closing costs, and then finally on top of that, if you're buying a home that is lingering on the market, that needs some work and is not turnkey, to come out of pocket and pay all of those repairs and update expenses. I know that's a lot. We've got a long list of loans that we can get you that wrap the cost of updating the property into the loan itself. The big advantage here, you don't have to come out of pocket that much more, but you get to build equity into this home, which means push comes to shove, the economy goes tumbling down as a result of these banks collapsing. You've got a nice cushion of equity because you've built value into that home and updated it. Basically, what I can do is I can run the numbers, get you an idea of the cost to update that home and the amount of money that you would make from doing those updates, so you can decide if it's a good investment or not. All my contact info is below, but wait until I tell you the second golden opportunity, which are new homes. The best pre-existing homes that are going on the market are selling like that. And if you're looking at those homes, you're going to be facing a lot of competition. While there's a lot of things that you can do to make your offer more attractive and more competitive, which by the way, all of those things, go ahead and send me a message. Everybody's situation is unique, but I've got a lot of tricks up my sleeve and we can put you in a position to write a winning offer. But why do that in a world where your budget is maybe $400 and up? We could find you a brand new home in which you're facing far less competition because not everybody's shopping for new homes. And meanwhile, over the last several years, home builders have built a wreck of new homes. There's a lot of new home inventory on the market. So just by making that decision to shop for new homes, if that fits your personality, your day-to-day life, and the location that you want, the new home could offer you the ability to get something that's brand new. You can get huge incentives from some builders right now that are paying down closing costs, that are paying down the interest rate on your mortgage, that you're paying less every single month. You can get a phenomenal deal without having to bid up an older home that probably is not worth paying a premium for. All my contact information's below. With those two golden opportunities, making your offer more competitive, I'm here to help and to leverage all of this information. So no matter what situation you're in, you know you're making the best decision with all of these question marks up in the air regarding the rest of the economy. Call, text, or email. I would love to help you out. If you enjoyed this video, learned something, found it valuable, hit that like button so other people see it. Subscribe so you're the first to see my update next week, where we'll cover how the Federal Reserve's decision will impact you, the rest of the housing market, and whether the rest of the economy will collapse. And I'll see you on the next video.